Well, 6 days of consecutive gains for our markets, 4 days of consecutive gains for the Dow Jones. Looks like most global asset classes, especially equities, are in good stead. But let's see which way things go for us. Our research team is here to give you the list of top 10 stocks as we head into trade today. So let's welcome all of them. Anuj, what are you looking at today?
So, still on the green side because that's the overall market mood. I think Bank of Baroda is quite interesting. In fact, the entire PSU bank, that rally is just not stopping. It's among the stronger ones in the recent move. Yesterday, there was massive delivery buying. I think there's a lot of under ownership which is getting corrected in some of these names. It's crossed the 200-day moving average and seen delivery buying, so could be interesting. I think keep an eye on DLF because yesterday there was fresh breakout in real estate. And DLF has consolidated for 2 days after that big rally and showed signs of fresh breakout yesterday. There was delivery buying as well. So I'll watch out for this stock.
Okay. Obviously, the one big stock we have to watch out for would be Mindtree and, of course, L&T. Mugdha is joining us. She's been on top of the story. Mugdha, so finally, what happened yesterday night?
Yes, L&T has initiated its hostile takeover of Mindtree by reaching an agreement with VG Siddhartha and his Coffee Day Holdings to buy their entire 20.2% stake in the company at rupees 980 per share. Moreover, L&T is looking to buy another 15% via on-market purchase and, an additional 31% through an open offer in Mindtree at rupees 980 per share. So if it is successful in buying all these shares, it will take its stake in Mindtree up to 66%, for which it is going to shell out as much as rupees 10,800 crores. Now, L&T says that, Mindtree will remain an independent listed entity after the acquisition and that it will benefit from the larger client base. But definitely this is not going to go down well with the Mindtree promoters who came out yesterday, condemning this move by L&T and say that they will remain unconditionally opposed to this takeover bid.
All right, Mugdha, thanks a lot for that. Let's see how Mindtree reacts. It's not perhaps the normal case where because the open offer has disappointed, the expectation being built was that open offer would be at 1,050, deal would be at 980. But here, because it's a case of hostile takeover,
it will be the same price.
Chances are that perhaps not too many would tender anyway. And let's see. This saga is going to go on for some time. But of course, you'll have the management of Mindtree joining us at 2:45, addressing the press. But what about L&T? Because the deal is happening via L&T, not via L&T's two IT companies. Anisha, how's the market going to respond to that?
Well, Anuj, while the L&T management says that they're doing this deal to increase the consolidated return on equity and that the deal would be value accretive in near to long term, there is a bit of overhang, and that is why the stock ended around 1.25% lower yesterday. Now, there are issues related to no immediate payback for shareholders, overhang and uncertainty regarding the capital allocation policy, as well as the loss of other income. And hence, Credit Suisse maintains that this deal might be EPS dilutive to around 2 to 3% when it comes to consolidated L&T revenue as well as the profit line. And hence, they believe that there might be some synergistic issues also between L&T Infotech, L&T as well as Mindtree. As far as Mindtree is concerned, the promoters and founders have come out openly and against this hostile takeover by L&T, and that is why Spark believes that their near-term business might get derailed. They believe that clients would question the certainty of the business, and that is why the auto booking in the near term might slow down. And hence, they maintain the sell rating on Mindtree and have cut the target price to 730 now. They believe, however, that the near-term upside in Mindtree stock cannot be ruled out, given the open offer that you guys talked about. On the flip side, for L&T Infotech, they have downgraded that stock now because they believe that the overhang of impending merger stays, and that's why keep an eye out on L&T Infotech and trade today as well. Back to you.
Okay, Anisha, thanks a lot for that. Remember, you can catch the management of L&T address the press today at 11:30 a.m. So that's going to be the big story of the day. But moving on, the ADAG stocks are also in focus today. The asset sale pact between Reliance Communication Group and Jio has now been terminated. Of course, the lenders to Relcom will be the ones that will be largely impacted, Lata.
Yes, that's it. So my sense is that since you were expecting the asset sale outside the NCLAT, there was some expectation of a big price, but we don't know now who will bid in the NCLT and at what price. I mean, if there is no opposing bidder, why should the bid be very high? These fears could cloud what the market will expect the lenders to get. But I don't know, the lenders are SBI, the big lenders are SBI, Canara, PNB, BOI, Union. Now, Anuj, as you were saying, the PSU banks are also seeing a rally. And this news has been, in the market for a very long time. So I'm not very sure whether it will be a very big negative. Let's wait and see. Fundamentally, then the chances are these banks are going to get a little less inside the NCLT. But therefore, that should be logically a sentiment negative. But it could have been priced in.
Okay, well, bear in mind the standard disclosure that the promoters of Reliance and RelGeo own and operate Network 18, which owns the channel you're watching, CNBC-TV18. But moving on, two-wheeler stocks will also be under pressure today because Financial Express reports that Hero, Honda and Royal Enfield will also go ahead and cut production. The expectation is that they will cut production by 15% from March up until May. That's, of course, because of higher inventory levels at the dealer ends. Remember, two-wheeler inventory levels have now reached levels of 80 to 90 days. Compared to a normal inventory of 20 days. So it's really unsustainable and hence they might go ahead with this production cut. Now also sales for two-wheeler companies have been faltering for a while. So if you look at what's happened from April to February, two-wheeler industry sales are up just 6.9% versus about a 14% growth year on year last April to February. Honda in December also had cut down production. So it's nothing new. Honda had cut down production because of higher inventory levels. Now some brokerage notes have come in. HSBC has cut their target on Hero MotoCorp to 3,500 versus 4,000 earlier. Remember, there's been a big underperformance that these two-wheeler makers have already seen. Hero is down 14% this year versus a nifty growth of around 6.5%. So more red expected there.
Okay, so Maruti and the two-wheelers.
On Maruti itself, actually, there's a Mint report which suggests that the company will raise dealer margins on their best-selling cars from January. So on Desire, Swift and Brezza, they will raise the margins by 3,000 rupees per vehicle. This is in order to help the dealers offload their inventory. And, the fact that 40% of their sales volumes comes from these three products. So they're basically covering the dealers because of these troubled times. This will be the first top car maker to raise dealer margins, and it could impact their margins in Q1 of FY20. However, CNBC-TV18 has not independently verified this report just yet.
Okay, so basically, like yesterday, production cut and now even a margin cut maybe for Maruti. Well, Anisha, HCL Tech on your radar?
Oh, well, yes, because they have signed a shared service agreement with Xerox Corporation, and that will mean that Xerox will outsource a lot of their global administrative and support functions to HCL Tech, and that will help them garner around $1.3 billion worth of revenue over the next 7 years. So, yes, around 9,000 crore getting added to the revenue over the next 7 years. So, a tad bit of positive.
Okay, well, thanks a lot for that. That's on HCL Tech. But moving on, Jet Airways continues to be in the news day after day. What's the latest here after that long meeting that took place yesterday? Ritu Singh filed this report.
Statements from both Etihad Airways as well as Naresh Goyal's own letter to employees say that negotiations are on as far as the resolution plan is concerned, but we're given to understand that Etihad is yet to commit any further fund infusion into Jet Airways, and this comes amidst tensions where we've seen Jet Airways grounding its operations from Abu Dhabi, which is Etihad's place of operation, clearly signaling that all is not well between these two partners. We're given to understand that Etihad has made it very clear it will not invest into the airline unless differences with Naresh Goyal are resolved. Now, these differences include one, of course, the perpetuity clause, which Etihad wants to impose, but Naresh Goyal wants to do away with. Second is, of course, the board seats, where Naresh Goyal wants to nominate 2 members, but Etihad is not agreeable to this plan. So, without these differences being resolved, there is no money on the table as far as Etihad is concerned, and without Etihad pumping in any money, lenders are not willing to give any fresh loans. But all of that aside, the State Bank of India chairman recently said they're still hopeful that talks are on, and hopefully there will be some resolution as early as this week. But for now, there has been no commitment whatsoever from Etihad Airways.
Okay, that's a fresh update on Jet. Some more flights have been cancelled, of course. Well, let's move on now and discuss some other stocks in news. Sonal?
Hi, good morning, Anuj. Well, I'll start with Aarti Industries. The company is planning to raise around 750 crore rupees via QIP, and the floor price for this particular QIP is fixed at 1470 rupees per share. Remember, the company had told us that they are undertaking some capital expenditure. They might use this money to fund that particular expenditure. Talwalkar's better value will also be in focus because promoters have sold around 0.23% stake in open market. Remember, the promoter holding stands at around 38%, out of which around 77% of the holding is pledge, that stock will be in the red today. Hotel Leela will also be in focus because the company has sold hotels in around 4 cities to Brookfield for a consideration of 3950 crore rupees. These hotels contribute to around 80% of the total revenues of the company. Remember, the market cap of the company is around 700 crore rupees, but it has a huge debt of around 6,164 crores as an FY18. So this will absolutely impact the stock today. Back to you.
Okay, thanks a lot for that. Here's a quick recap now of our top stocks in focus. Stocks with positive news flow are Bank of Baroda, DLF, L&T, HCL Tech and Hotel Leela. While stocks with negative news flow this morning, Mindtree, Relcom, SBI, Canara Bank, PNB, Hero MotoCorp, Eicher Motors, Maruti, Jet Airways, RT Industries and Talwalkar's Better Value Fitness. So more red stocks than green this morning. Let's take a quick break. On the other side, plenty of technical tips lined up with Sudarshan Sukhani, Mitesh Thakkar and Prakash Kama.